Yo guys, welcome to a new video. Today I want to explain a homework assignment I did for my students, and I also want to explain this to you guys today, how we could catch longs to the upside over here. To start with, please like, subscribe and comment under the video. On that way we are able to continue posting free videos for you guys. As far as the channel will start to grow. So to start out with, you want to catch this move to the upside because the London Open is right, or the New York Open is right here, and it's been bullish for several hours now, and you want to catch this move to the upside. So what are we looking for? We're looking for imbalances and sweeps. Here you can see, if you draw your Fibonacci, from the low to the high, the 0.5 got mitigated. So, and it also did not really sweep anything over here. It has some imbalance, but yeah, we can mark out this zone. But that wouldn't be my favorite, as it really didn't sweep any liquidity. Then, if you draw a Fibonacci from this low to that high, you can see a lot over here. We have a sweep of liquidity. It swept these lows. And it filled the 0.5, 0.618, which I just pointed out. From there, so we can delete this. From there, we also see a lot of imbalance over here. So we can also mark out this zone as our demand zone, which we can be looking for to long from. And this is more valid for me because it swept liquidity. So from there, let's play it a little bit further. We will watch that zone. This could be an ICT move, because they of course will long from this zone because there's imbalance with the stops below, and they will target the high, which would be almost a 2-hour trade. We on the seconds, we could also catch that. We could catch that way better because we simply look for a double confirmation over here. And I explained that in my mentorship, but let's keep it on this now. We could take it like this, and we could also target the high. And this is also why the seconds is basically a life hack, because you can get way better entries. As you can see, it perfectly played out. So in this case, and we know this is liquidity because on the 1 minute there's still imbalance left. And I must say it got filled. All the imbalance got filled, but we have a very clean zone over here, like this. So we could also mark this out as our inducement or induced low. And we'll be watching this zone because it already gave us a break of structure to the upside over here. So let's delete this zone for now, and let's keep our eye on this zone if it comes back. Talking about smart money is looking for a setup from a zone like this, or maybe even a refined zone, this candle, on the 1 minute, because it broke structure to the upside, and they are simply blindly following structure to the upside with limit orders, which is gambling in my opinion. So they put their entries like this, TP right there, and as you can see, they got tapped out with zero confirmation. Like you might have, it didn't even give a double break of structure, change of character and a break to the upside. So they would get trapped over here. It would go slightly in profit And you can also see it respected a supply level over here. So they got trapped. So let's delete this for now, because the basic SMC traders, they took a loss. And we are still watching confirmation on this zone. So let's play it forward. We are on the 5 second now because it filled this zone, took this inducement. This zone swept liquidity, so a lot of confluences. We can go higher. And also it trapped the smart money traders, took fuel of their stop losses, like a car needs fuel, and also the charge needs fuel. So see it like that. So they got swept, and this must give us the fuel to move up again. So let's see what happens on the 5 second over here. It's still bearish. Now it broke structure to the upside, changed character. And you could also call this your fake change of character, because this got swept. These lows, these got slightly swept. So this is a sweep, and this is another confluence. If it now confirms to the upside, because we have a fake change of character, we had a sweep of that, sweeping the early bias, that we can move higher from there. So let's see, this is our real change of character. After taking these stop losses, providing the fuel to move up. So now we will look for our entry, and let's see, let's play it a little bit forward. Okay, now it's pulling back. So you want to draw your Fibonacci from the low to the high. 0.5, 0.618, most probably will hold, but let's mark out this whole zone. Let's get this a bit down now. We will watch that zone. For again, a 1 second confirmation. Boom, it's in the zone. It's creating a high and breaking up. So you could enter either with your stop loss below here, on this break of structure, on this change of character, aiming for very high. Or if you want to play it a little bit more safe, you can put your stop loss below. Let's play it like this now. And like magic, playing out beautifully. And then we aim for the high, of course, because on the high time frame it make a break of structure, it's uptrending. You want to target for another break of structure to the upside. So this is how it played out. And it's also a rule that I got in my that I explained in my mentorship, and I got in my rule book and my rule set and my trading plan, about this break-even level. If you went break-even early, you would have get tapped out break-even. See, because it's simply a mitigation of another demand zone where we have entered. So if you stick to the rule book I present in my mentorship, you would not have get tapped out, and you would ride in profits big time right now. And as you can see, TP got hit over here, and it took us only 40 minutes for an 18-hour trade. Like, isn't it beautiful? So yeah, that's really what I wanted to explain with the strap of the SMC and ICT traders. And just I wanted to show you some little some confirmation methods we use in our mentorship on these seconds. So yeah, as you can see, this was at London close also. So basically outside of the normal trading hours, how they like to call it. We basically really don't care about those trading hours. We can trade any session, we can even trade Asia session, as long as everything gives confirmation and everything has a little bit of volume and is moving clean. The moving clean part is very important because you don't want to trade the choppy market. Because in a choppy market, neither supply or demand gets respected over and over constantly. So yeah, something to keep in mind. So yeah, that's it for now. I hope you guys learned a lot from it, and please again subscribe, leave a like, place a comment under the video, so we can keep posting free videos for you guys. Alright guys, I'll see you on the next one. Ciao ciao.